Ladies and gentlemen, welcome back to the channel and welcome to likely some of your guys' first market crash that you have seen. This has been the worst start of a year since 2016, and I believe today is the worst start of a year since 2009. This could get a whole lot worse before it gets better, because what I've been saying is finally starting to be recognized by market participants, and that is that earnings in 2022 are not going to be as good as the past 2 years because stimulus is gone. I think trading algorithms are starting to realize this, and they're starting to sell stocks because, like I have said for a while now, high inflation is bad, the Fed tightening is bad, but if earnings are increasing year over year, it's not all that bad. The dagger in the coffin is if earnings are going down. So that's exactly what I personally think is causing the markets to go down, this rapid reevaluation of these largest companies that control the markets. Now, we do have Microsoft earnings that are tomorrow after hours. Then we have Fed Jerome Powell the day after that. And then the day after that, we have Apple earnings. So back-to-back market moving catalysts. So it's going to be a crazy week. Expect a big bounce or a big sell-off. Good thing is we have been making trades to protect our portfolios in the buy and sell alerts linked down below in the description. Like I said yesterday, I made a $5,000 bet, and that's exactly what we are doing here today. We're waiting for the flush down to the bottom end range. It does not look strong at all today. But AMC, let's move on to that, because AMC is chilling out at about $15.30. And this is exactly where I said my worst case scenario is likely to be. Could we go lower than that? Sure, we could. It's a full-on panic mode, mass liquidation across the board. So sure, could we go under $15 temporarily? Yes, that's 100% possible. But if we do take a look at the volume, it's 27 million, and we're about 2.5 hours in, about midway through trading today. So it's not a very high volume day. It's not out of the normal for AMC, so that should be good. Rest assured that it doesn't look like a lot of people are actually selling. What is happening today is that you are seeing a lot of shorts that are shorting the stock. Short interest is now at 20.66% with 106.05 million shares that are sold short. So definitely an increased shorting day as of today. 3.74 million shares that are borrowed, and a $3 million or 3 million share borrowed day. For share utilization, you're looking at 67.78%. Look at Sparty. AMC go up. Party. Yeah, so it's looking pretty good. Days to cover, 2.54 days to cover. This cat's an asshole, just so you guys know. Surprised he didn't bite me. But everything on the ortex data is looking great as far as the short squeeze is concerned. And let me be very clear about this. We have to see the markets go down into the toilet, and then when we're at the bottom, see a catalyst for AMC, whether it's just a lot of people buying, whether it's a company news fundamental catalyst, something, and that's where you get the short squeeze. Just because we fall into the ground, if we don't get a catalyst, that doesn't mean we will just automatically see margin calls and see shorts covering on their short positions. They're obviously doubling down on their shorts as of right now. So that's really what you guys need to know as far as why the markets are actually selling off. I think, like I said, it's the revaluation of all of these largest companies, and I think obviously you have to value these companies less because projected revenues are going to be less. We've went over it many times. The Google trends for iPhones, for home loans, for auto loans, all of these different things are at 5-year lows. So it's hard to imagine that algorithms are not actually picking up on this if, we are ourselves. Hopefully that makes some sense to you guys. But a full-on mass liquidation. Dow Jones down over 2%, S&P down 2.5%, NASDAQ down about 3%. So this is a tough start to the year. Other than that, there was two ballistic missiles that were intercepted, I believe, over the United Arab Emirates. I think that's how it's pronounced. And that actually came out at about 5 a.m. I got a notification on my phone. I actually woke up to that, and that's when futures started to tank into the floor. The Russian stock market was down about 7%. Global tensions are at their highest levels we have seen since the Cold War, and that is pretty much to sum up what is going on. Mix that with Fed Jerome Powell and the earnings that are coming out tomorrow from Microsoft and Apple in 2 days. That's why the markets are selling off. Rest assured, I do not think this is time to freak out and sell the portfolio. Definitely not time to be selling AMC at the bottom. You had plenty of chances to sell out before this. Now you hold on, you strap on, you meditate, or do whatever the hell else you got to do to remain calm in these very volatile situations. Because even like what Warren Buffett says, the stock market is simply a tool used to transfer wealth from the impatient to the patient. So this is all a game of being patient. I have not sold anything in my portfolio. I have just hedged for the downside to protect my portfolio, and there is nothing wrong with that. As far as the max pain, let's go ahead and give that a glimpse, and we can see that the max pain is at $20 for AMC. So that's still a $5 move from where we are currently at to the upside. So that would be a good solid move if we did see that. As far as the stonk tracker data, take a look at this real quick. We're seeing about 6.4 million shares that are available to borrow. We're looking at only 1,700 calls that are in the money for this week, 101,000 calls that are out of the money for this week. In the money puts at almost 60,000, out of the money puts at 22,000. This could set us up for a large mega bounce if you do see bullish sentiment come back into the markets later on into this week, as we do have that 60,000 for puts that are in the money and so few puts that are in the money on the call side compared to out of the money. So the mega bounce theory consists of, on a weekly expiration, when you see a lot of calls that are out of the money relative to calls that are in the money, and a lot of puts that are in the money relative to out of the money, you could see that double form of buying power coming from the market makers just on the option chain. And then if you get the FOMO buying or something else come in, it could be really good. But that is the scoop as of right now. Not too much else to actually add. Markets are in a very weird place. We're waiting for the flush to the downside or a bounce. We've really been fighting in between these two lines right here, and we have some trades on the SPY, so that's why I'm watching it pretty close as of right now. And if you guys want access to all of those trades in real time, link down below in the pinned comment for that, as well as the link for my Twitter account. Go ahead, follow me over there. If you guys want to get totally free stock with Public, Webull, or Moomoo, check those links out. Link down below in the description of this video. I wanted to keep this one pretty short because you guys are probably glued to the charts just like I am. I can't blame you. This is the most exciting time to be an investor, and welcome to some of your guys' first market crash. Love and appreciate you guys. Thank you for watching. I will see you in the next one.